Investing scares people not because it's risky, but because it feels confusing. You see charts, you hear jargon, and there are opinions everywhere. Most people don't avoid investing because they're lazy. They avoid it because they don't want to feel stupid. So today, we're stripping investing down to its simplest, safest core. We're going to show you how you can start calmly, confidently, and without any of that overwhelm. Let's talk about why investing feels so hard when it really isn't. The financial industry actually benefits from complexity. When you're confused, you become dependent on them. But at its heart, investing is incredibly simple. You buy productive assets and you give them time to grow. Everything else, all the noise, the trends, the constant predictions is optional and, frankly, mostly useless. Think of it like this. You plant a seed, you water it, and you let the sun do the work. You don't need to check on it every 5 minutes, and you definitely don't need to listen to everyone's opinion on how it should grow. So before you even think about where to put your money, you only need to answer 3 simple questions. First, do I have an emergency fund? This is your safety net, a stash of cash to cover unexpected expenses so you don't have to sell your investments at a bad time. Second, is my high-interest debt under control? I'm talking about credit card debt or personal loans. The interest you pay on that debt will almost always outpace any gains you make from investing. It's like trying to fill a bucket with a hole in it. And third, am I investing money I won't need soon, say, within the next 5 years? The market goes up and down, and you need to give your money time to recover from any dips. If you can answer yes to all 3 of these questions, you are ready. You don't need to be an expert. You just need to be eligible. Now, what should you actually invest in? Let's go with the calm, simple version. Forget about trying to pick the next hot stock. Ignore the predictions you see online. The smartest and safest way to start is with broad market index funds. Think of an index fund as a basket that holds a tiny piece of hundreds or even thousands of the biggest companies in the economy. You're not betting on one company to succeed. You're betting on the entire economy to grow over time. These funds only fail if the entire global economy fails, and if that happens, our investment portfolio will be the least of our worries. This is the quiet secret of many professional investors. While amateurs are loudly chasing excitement, the pros are quietly using these boring, reliable funds to build wealth. So how much should you invest? Don't stress about finding the perfect number. It doesn't exist. Just pick a percentage of your income that feels comfortable, even if it's just 5 or 10% to start. The key is to automate it. Set up a regular, automatic transfer from your bank account to your investment account every payday. Then, forget about it. Let it run in the background. Consistency is so much more important than trying to time the market perfectly. Nobody can predict the market's highs and lows, but by investing consistently, you buy more when prices are low and less when they're high. This is called dollar cost averaging, and it's your best friend. The market rewards patience, not bravery. Finally, let's cover the emotional rules of investing, because this is where most people go wrong. Rule number 1, during a market panic, when everyone is selling, do nothing. Your job is to stay calm and stick to your plan. Selling in a panic is the fastest way to lock in losses. Rule number 2, ignore the daily financial news. It's designed to create drama and trigger an emotional reaction. It's not designed to help you. And rule number 3, check your investment accounts quarterly, not daily. Looking at your portfolio every day is like weighing yourself every hour. The fluctuations are meaningless and will only drive you crazy. Remember, most investing mistakes aren't financial, they're emotional. Calm investors win because they don't sabotage themselves with fear or greed. I want you to leave with this thought. You don't need to feel confident to start investing. The confidence comes asterisk after asterisk you start and see that it's not as scary as you thought. You just need to take that first small, simple step. If you're ready to embrace this calm, boring, and successful approach to building wealth, comment "Calm Investor" down below. And if you found this helpful, please give this video a like and subscribe for more simple financial advice. Thank you for watching, and let's let time do the work.